My name is Polly Jean Harrison. I'm the features editor over at the Fintech Times, and I'm thrilled to be here today on behalf of the Power 50 to moderate this discussion all about digital assets. So digital assets are a constant trending topic within fintech, with the rise and somewhat fall, depending on who you speak to, of cryptocurrency in terms of popularity. It's an all-time high in some places, but consumer trust can be wavering, as well as the rise of blockchain technologies and even CBDCs making an appearance. With these digital assets constantly trending, we're going to take a look today at the current digital asset landscape and how the industry has evolved over time. I'm thrilled today to have two fantastic panelists joining me for this discussion. So I'm here with Ruth van Hoover, author, influencer, and absolute expert on everything involving payments, as well as Sasha Skorik, Director, Product and Banking Relationships at Clear Junction. So thank you so much both for joining me today. It's a genuine pleasure to have you here.
Thank you, Polly.
Good to be here.
Amazing. So before we get started on our discussion all about digital assets, it would be great if you could give us an introduction as to who you are, the kind of things that you do. So Sasha, I'll go to you first. It'd be great to know a bit more about yourself and about Clear Junction as well.
Yeah, sure. I can give you guys a bit of background. So I run the banking and product team at Clear Junction. Clear Junction's been around for the best part of a decade. And we've, amongst other verticals, supported crypto pretty much since day dot. So regulated crypto exchanges, custodians, brokers, kind of the best of the crypto space. Those that are regulated, we bank them. So we provide them payment services to allow on and off ramping, collections, trading activity, and so on. It is an evolving landscape. Every country takes a different view. The banks in different countries take very different views on how they want to treat this space. So it's always exciting. Every day is stressful, and it's great. Love it.
Thank you so much. Yeah, it's definitely an evolving landscape, which we'll get to in just a moment. But Ruth, it'd be great to hear a little bit from you as well, and an introduction to yourself.
Yeah, thank you so much, Polly. It's a great pleasure to be here with you all. I've been, funnily enough, in payments since 2003, which is quite a long time. But I spent a part of my career in policy negotiation and lobbying in Brussels, in particular, around payments and opening up those floodgates for fintech in sort of 2007 plus with the Payment Services Directive. I spent my largest part of my career so far in Citigroup, 11 and a half years, where I globally then ran all the regulatory market strategy engagement for the Transaction Bank as managing director. And since 2007, I retired from banking and I do multiple things. I'm a non-executive director on the board of a bank in Ireland, on the board of an exchange in UK, Europe, and also on the board of a smaller fintech that looks at the payment space and cross-border. Until recently, I was the chair of the Payment Systems Regulator Statutory Panel, and I'm very interested in this digital evolving space. I've written 3 books about how the industry is coping with initially regulation and then technology, and how we can actually re-decentralize more, because we've become very, very centralized, which is, of course, an area where some of these new technologies are promising decentralized finance as a sort of future of financial markets altogether. And I'm also very interested in teaching that. So I'm a professor at Cass Business School, teaching fintech and digital money in particular, and doing some executive training. And it's all about connecting the dots, advising fintechs, and making sure that the future of the financial services industry is built on better principles and ethics, but also using technology in a more intelligent way, and hopefully becoming more transparent and fairer to the end user, which is something that traditional finance hasn't yet really achieved, in my view.
Amazing. Well, thank you so much, Ruth, and thank you so much, Sasha, for being here. I'm thrilled to have you both here for this discussion, because I feel like there is so much to talk about. As you were saying, Sasha, the landscape is so different no matter where you go, and it's constantly evolving. So I guess to start us off, why don't we sort of look at the current digital asset landscape as it happens and as you see it? So Sasha, we'll start with you first, since you kind of already got us into it a little bit. What does the landscape look like in your opinion, and what kind of are you seeing at the moment?
There we go. I think I've unmuted myself. So we see it going mainstream. It's definitely here to stay. I think that's accepted by most folks now. I think increasing regulation globally, it is still quite fragmented. And I think that's where there is an opportunity for companies that can really nail navigating those regulatory landscapes to do well and have a competitive edge. It's definitely still, the predominant narrative is investments, trading, payments. NFTs have somewhat fallen out of favor, although there are some really interesting projects that are doing ticketing of various kinds. tied to non-fungible tokens. Digital identity is a really big one. It's not something that we deal with at Clear Junction. Given that we're a payments business, for us, it's very much we're all in on stablecoins and using that as an efficient settlement mechanism. But for me personally, digital identity and owning sort of my data and being able to monetize it myself, I think is a very powerful primitive.
Yeah, absolutely. And I think, yeah, you're absolutely right in digital identity. And it's funny that you bring up NFTs because I was going to talk about that a little bit later on in terms of kind of their big popularity and then the little bit of a fall, I guess, if want of a better word. But I mean, Ruth, let's bring you in on this. What are you seeing in the current landscape? What's it all looking like to you at the moment?
Yeah, I think maybe for everybody listening and viewing, it's quite important to sort of give a high level definition of digital assets, right? I mean, many years ago, a digital asset might have just been a Bitcoin when it was sort of starting in the early days. Really something created digitally, stored digitally, something that you can somehow identify and provide and discover. And there was some value associated to it. Now, the value discussion is an interesting one because value can be anything that you decide it has value, right? The US dollar happens to have value because people believe in it, but so has Bitcoin. And sometimes they believe a bit more, or sometimes you have incredible speculations going on with some bigger players and it goes up or it goes down. But the whole digital native piece is really, I guess, the highest level definition for digital assets. And if I think about sort of the vision I have around redefining financial markets and services altogether, it's really about thinking further down the line. Where do we move from technological experiments with Ethereum and Bitcoin and smart contracts and what we could maybe call digital currency? Of course, you have also then the topic of central bank digital currencies coming into it, even though it's unlikely in some markets that this will actually happen on any form of distributed ledger, which we would consider as the underlying infrastructure, to think ahead and say, well, if I today buy an Apple share, on my sort of Hargreaves Lansdowne app, it's a sort of dematerialized share and I have an entry. It's all digital, but it's not in a distributed way. It's not in any shape or form decentralized for that matter, which Bitcoin isn't either. But how about we think that in the future, businesses that want to issue shares, issue those in a new technological wrapper, like a digital asset on a digital asset exchange, maybe allow a lot more things to be done with it in terms of fractionalizing it further, making it smaller, and therefore opening up investment opportunities for more people in the public as opposed to those that can afford one share. Of course, you can also already do fractional share buying in some instances. And we've seen this interestingly when you mentioned NFTs, Polly, in the space of digital art. You can create digital art and then you can sell it by selling digital ownership of art in form of a non-fungible token, as an example. Now, just one word on non-fungible tokens, which are actually very interesting when you think about it from a law enforcement perspective. Already last year, we have seen that the Singapore blockchain court, which is so far, as I know, the only court in the world that is experienced with blockchain technology, used NFT technology to actually serve an injunction on a bunch of digital assets, which in that instance, I think were Bitcoins, so that nobody, not the people that have stolen them and not the people that truly owned them, could touch it, right? So you can actually start to deliver court orders of hundreds of pages in digital form via an NFT, as an example, which is a very different application of NFT technology than what we've seen with the bored apes, and all these pictures online, which really had no intrinsic value, but for some time they had because some people believed in them and then they stopped believing. But I think it's more about thinking how the technology could re-engineer processes we have today and potentially create completely different platforms in the future where you broaden access to finance, but you also make things that are today very illiquid and intransparent more transparent over time.
Yeah, absolutely. Thank you so much, Ruth. I feel like you've given us a really broad overview there. We will come back to NFTs a little bit later because I do want to talk more about them. But you've already answered my question slightly here, Ruth, in terms of how much does the digital asset industry go beyond cryptocurrencies and things like Bitcoin, which you've already sort of addressed. But I'd love if you could just expand on that point just a little bit more here. There's so much that we can do, right? And there's so much in this industry that we have use cases for, like you're saying with the NFTs in the blockchain court, it's more than just crypto, right, at this stage?
Yeah, I think what you always have to take into account when we look at the traditional financial industry, which of course we would like to move towards this new world, is sort of inertia and the fact that many people sit on very old technology stacks generally, which already is a challenge even with normal digital banking, never mind digital assets and distributed ledger technology. But we have seen many pilots of enterprise blockchain which haven't really yielded much. We have seen pilots around CBDCs and cross-border, and also flipping securities into cash and having cash security transactions on the same ledger. So there are technical tests going on. But the most important piece that tends to be addressed at a later stage is things like your regulation. Sasha already pointed to the fact that we do see increasing regulation, but it's not consistent around the globe. And in a way, that new market segment that's still in its infancy is sort of making the same mistakes as the traditional world of finance, which has homegrown laws and homegrown practices. And even if you have global principles and rules like Basel or FATF from anti-money laundering, you tend to end up with many different local flavors, which often make cross-border transactions much harder. And so, of course, then it's a business opportunity, as Sasha pointed out, for those businesses that specialize in the cross-border angle, whether it's to do with value transfer or other kind of transfer-related activities. If you know all the different pieces and you can glue them together with your infrastructure, you can bridge those differentials. But you would ideally want to see some global principles at a regulatory level in terms of consumer protection, transparency, and also security. And that always comes for me even into the question around centralization and decentralization. We know that in Bitcoin, it's a group of very few people that ultimately decide whether the code gets to be upgraded. So you can't tell me it's a decentralized network. It is distributed because all of us, if we had enough computing power, could be part of the mining, which again is centralized because of the scale that you need. But we could all download the whole protocol and be somehow part of the whole if we wanted to, within sufficient barriers to entry today, which were very different, I guess, 7-8 years ago. But we are in increasingly centralized structures with those things. So the question for me is really how you look at exchanges. For example, we have RChex in the UK, which is the first digital asset exchange. You have a regulatory wrapper around it. You have a provider operating it, and you can, exchange stable coins. You can, as a business, decide to issue your share onto RChex in a different technology format. And I think it's about the ability over time to prove that there's value into using new infrastructures where you can do slightly different things with the asset in terms of transfer value and storage, which ultimately then will take its time to become mainstream. But I know that the exchange world, the traditional ones, are also looking at digital assets and how to create platforms where you can have issuance and trading in those new technological formats. It's a question of time, but there is significant interest, which is now more stable and serious than it was maybe years ago, where it was just about a Bitcoin speculative fad in a certain extent.
Yeah, that's really interesting, Ruth. Thank you. I mean, Sasha, let's bring you in on this. How you were speaking before about digital ID and things like that, but how far beyond crypto does the digital asset industry go, in your opinion?
Yeah, sure. Pretty far, pretty far. I think tokenizing everything is. I think we overestimate sort of how much things will be adopted within this sort of short time frame of 1 to 2 years, and underestimate sort of what will happen in the decade. I think we saw that with NFTs and putting everything on chain. Putting something on chain doesn't really increase the liquidity of it. You still need a market, and there's a lot of barriers to entry that continue to exist. I think outside of stable coins, as I said, digital identity is a really big one. For me personally, in anything I do every day, I'm logging in somewhere, I'm filling in my details, and having that sort of the seamless login with Google, which sort of plugs you into any website, is great, and people are very happy using it. But ultimately, it is a private listed company that controls your data and monetizes your data. And the same goes with any social media platform. So having something like a MetaMask equivalent, but instead of containing Bitcoin and USDT or USDC, it contains your data that you're able to plug in. That's a very powerful primitive that I haven't seen executed very well. I don't know if that's a user experience problem. I think there are GDPR and data protection challenges. They can be addressed by things like ZK rollups and sort of zero knowledge proofs. This is a whole. I think there's a whole podcast that can be dedicated to this alone, and there are some very interesting startups in the space. But sort of, as I said at the very beginning at Clear Junction, for us, it's all about stablecoins, and we believe that the right to transact is a fundamental human right, and we want to make that as borderless, seamless, and sort of as cheap as possible. So.
Yeah, fantastic. And that does kind of lead me on to my next question, which is what is the potential impact of digital assets within fintech? I think, Sasha, you kind of started there with, the right to transact and things like that. So what kind of impact do you think we can see in the industry when we utilize digital assets in this way?
Sure. So I think Ruth kind of added to her own point earlier about accessibility to trading sort of equities. There are fractionalized shares. So I don't think the use case is as big there today. You've got things that are sort of projects like Ondo Finance and Athena that are doing sort of various more sophisticated strategies and wrapping them into digital assets, covered call strategies, tokenized deposits. That is still, I would say, sort of more sophisticated and on the fringes. I've seen a lot of retail fintechs that are looking at loyalty programs. And again, I'm talking about my pain points, thinking about how this technology can solve them. My pain point with loyalty programs is that they're a closed ecosystem. Starbucks is essentially a bank. They're sitting on massive balances of those credits that their users have. If there was interoperability, if I could hook up my MetaMask to a DEX and trade my Starbucks points against, I don't know, Tesco points, amazing. And that whole market, obviously those participants have to be willing to open up their closed ecosystems, which they're able to monetize to date. But the technology is there, and the barrier to getting to that state has really decreased.
Yeah, that's really interesting. I mean, Ruth, what do you think on this in terms of the impact?
Look, I think it is going to be significant over time. Everything does take time, but I would just like to say a few words also on the digital identity piece, which in itself is a fintech opportunity, right? I mean, I think we have a lack of awareness in the population generally across the globe somehow, that your identity today is with Google and Facebook, right? I mean, that is just the problem. And people have been opening their kimono maybe to the wrong parties for too long, rather than understanding that they need to themselves to have a better visibility as to what they do with which parties, what data other parties actually hold about you. Because as you rightly said, Sasha, I mean, mostly people don't know that their data is going to be taken and monetized, and they don't remember where they've, given certain credentials and information about them. So kind of trying to roll back on it is going to be hard. But the Europeans at the moment have, in their regulatory proposal for the third payment services legislation there, that, for example, the banks will have to give them consent dashboards, right? Which is more of an open banking piece, but it would allow you to see, oh, I've consented to this provider to share my account information, or to this provider to share my address for delivery, or with this provider to just prove that I'm over 18 with zero knowledge proof, as an example. So giving users an overview of how they act with their own digital footprint through a type of MetaMask wallet, where you can see your different engagement endpoints and what's actually going on, would help to start educating them as to the breadth of their activity, which today they're not aware of, and the fact that these tend to be just with one or two big techs as a regular, maybe three, because Amazon obviously delivers everything for you, right? And I think that is a problem. We are too concentrated, which is my whole centralization mantra. It's a problem. We need to re-decentralize and divulge the power back to the actual owner of the information and the individual. And I think that is something both on the regulatory level as much as on the user level, where I see a lot of potential for fintechs to come in with viable new services that will work, because users will see the value of having a safer journey through the digital ecosystem. And of course, if we think about Web3 and more stuff being done on types of blockchains, you really need that. The existing tools do not help you in that way at all. So I think that is an area for me where there's a lot of potential for fintech. And it's really thinking about the ecosystem. There will be so many different elements that you need to make this new world of finance work, which is, again, usually something that fintechs are good to grasp, maybe in a smaller niche, and then expand. And then they might be sold to a big tech think about that in your own plans, or you may be able to grow and partner with others and have a more sort of, I guess, democratic distributed type of community of service providers, as opposed to full concentration, which is an economic efficiency, but it's really not any benefit to humankind at the end of the day, as we're seeing, right?
Yeah, that's really interesting. Thank you both. I guess let's talk about some of the pain points then, and let's think about kind of the challenges of digital assets and implementing them within fintech or just using them on their own. What are the challenges that we're seeing? And I guess this would be a good time to talk about maybe consumer trust in a certain way as well, because I know obviously we've had quite a lot of bad press around traditional cryptocurrencies over the past few years and things like that, and then NFTs like we were talking about before. What kind of challenges are we seeing? But Ruth, I'll ask you that one first.
Well, I guess the biggest challenge is, of course, lack of understanding. So I mean, that's why the FCA is now cracking down on some social media influencers that have recommended to kind of do certain digital asset transactions. But the point here is that for some time, when Bitcoin really went up a few years ago, and Elon Musk went into it, and other kind of famous people, I would say, that people read in the mainstream media about, that's where people thought, oh, should I have a try as well? I mean, I recently talked to quite an old Irish taxi driver, and he's got some bitcoins, right? I mean, you couldn't make it out. And it's sort of, once things become visible in the media, people try it out. The question is how much they're trying it out. And of course, some individuals have been a bit more reckless and have been sort of mortgaging their parents' house without them knowing it. I mean, whatever might have happened. The problem is, of course, that these assets until today are highly volatile. Sometimes it becomes a bit boring. Now with the halving, it didn't become much more exciting, even though we thought it would on the Bitcoin front specifically. But of course, we have also seen a whole raft of new coins for specific purposes and utilities and for kind of value transfer networks. So there's so much out in the market that it's all about the experimentation that is showing off and blooming out, but understanding the detail of what the purpose of this particular coin is, who's promoting it, why it is it just a scam, or is it something really useful, where it takes quite a while, even for somebody very informed, to navigate through this. And I would say that about all those kind of altcoins out in the market, which are not necessarily the digital assets, if we think about, share issuance in regulated environments, right? That's a different type of digital asset. So I think there's a lot out there, and getting your head around it is hard. And the regulators have been quite slow in some markets to jump on and say, guys, we have to tell the population it's not so easy to become a millionaire overnight, because some people made mistakes. And then, of course, you have also the banks in the middle, which can sometimes be a challenge. I remember I advised a company years ago that was actually doing anti-money laundering tracing for Bitcoin and Ethereum and some other bigger coins. And they themselves found it really hard to get bank accounts, even though they were not trading in crypto. They were an ecosystem provider to make it a safer ecosystem, so doing the right thing. They all were ex-AML people from big banks, and the banks cannot differentiate until today. They find it quite different. So the traditional banks still sort of put a bit of a limit on this, which indirectly protects consumers, because you can't change all your deposits into crypto. But I think there needs to be more education. And of course, the market continues to consolidate on some of those coins. We've seen lots of projects over the last 5 years that were scams, right, which ultimately folded and people lost their money. So it's like with anything in the speculative world, you just got to be careful. And I think regulation is only one part. People have to start living it and be more risk aware. And I think if you kind of suddenly say, oh, the Hong Kong Stock Exchange, Singapore Stock Exchange, New York Stock Exchange has a digital asset exchange using Apple and Google and some of the big shares on that, that's a very different proposition to a consumer than saying, oh, buy some Bitcoin, or buy some funny coins. I don't know what they're called these days, which might not exist in a year's time, right? So it's about the transparency and the understanding.
Yeah, I think you're absolutely right. And I love how you mentioned sort of like the social media influence aspects. That's something that I'm seeing so much like scrolling through. And I think people seem to see it as like a get rich quick scheme. And obviously, as you were saying, that can usually more 9 times than not end in losing a lot of money. But I mean, Sasha, what do you think about this? Where are the challenges as you see them when it comes to digital assets?
Yeah, so I think it's a perception problem. So the things that we've touched on so far, someone remortgaging their parents' house. I don't think that's a crypto problem. That person, is gambling, maybe reckless. That's an addiction. You can lever up and trade equities as well. So I don't think that's sort of unique to crypto. I think ICOs we've kind of managed to get a grip on. And I do think that was a little bit dangerous. But broadly speaking, it's not a crypto problem. And when we talk about fraud and when we talk about sort of money laundering, to date, when you look at the statistics, it's still property, which is the single largest destination for illicit funds to go into. You can go and buy a 10, 15 grand watch on New Bond Street and nobody's going to ask you for source of wealth or source of funds. To on-ramp your money with 99% of on-ramps, you need to go through a full KYC process. So I do think the industry is actually really sort of tightening up their game. I think the fraud and the money laundering narrative is a convenient sort of excuse. But when you dig into the numbers, it's not really representative. I think a second piece, which we are working on, is APP fraud. And that's authorized push payment fraud. And that is a very real issue. And that comes down to the technology. So you can very easily move funds out of an exchange into a mixer like Tornado Cash and obfuscate, where the funds have then gone. Probably a lot easier to do than it would be in the banking system. So what we see folks doing is scamming people, getting them to deposit funds onto an exchange, and then kind of the trail goes cold after it goes through a mixer. That is very hard to fight. And we've seen a lot of there's new regulation coming out, new guidance coming out, whereby banks, payments companies, and exchanges will bear the brunt and will sort of be fined and punished. But beyond the stick approach, there isn't a lot of real actionable advice that's actually coming out as to how to tackle this, other than we will punish you if you facilitate it. So that's quite a tricky and currently evolving issue in the space. I think the final thing that I will say is, again, I'll come back to stablecoins. I think broadly a very positive development. It's brought euro-dollar access to people globally. And in Europe, we're privileged in the sense that we have stable politics, relatively stable economies, access to bank accounts. Ruth, you said you worked on PSD2, PSD3. These are fantastic initiatives, which mean that we can all get fair access to banking services. If you're in a country like Argentina, or other Latin American countries, Africa, where there's hyperinflation, governments are changing constantly, you probably want to be sat in the dollar or even in Bitcoin. And the ability to sort of on and off ramp seamlessly, to sit in that asset and then sell it down when you have a liability, when you need to pay rent, when you need to pay for your kids to have, to pay for their schooling, is really powerful. So it needs to be regulated. But the idea to give euro-dollar access to folks globally is really powerful. I think there's a lot of books that have been written recently around the fall of sort of Pax Americana and the sort of the fall of US dominance. Stablecoins are an immensely powerful way for the US to reassert global dominance. And it's a shame that the current administration has, in my view, been sleeping on that somewhat. And USDT has been pushed offshore. It always has been offshore. That's the separate Bitfinex issue. But if the US embraced stablecoins, again, that is US dominance being sort of sold worldwide. I'll pause there.
Just to say, the last thing I would be pushing for is US dominance worldwide, but then also no other dominance either. But I think you're right. They're not seeing it, but I think they are seeing it indirectly because the US has not made any serious strides in developing their central bank digital currency, whilst the EU sits sort of in the middle and sees the value not only for its own market, but also maybe from a trade-related perspective with also euro stable coins, which is a very different, more open attitude with better regulation. So I agree with you on that one.
Yeah, that's really interesting. Yeah, no, thank you both. You both touched on regulation in your answers, and also we've sort of spoken about it previously in the discussion. So I'd love to just sort of bring it up now as just kind of another sort of expansion on it. But how much does regulation come into play when we think about digital assets? Like you both said at certain points that the regulation isn't sort of doing what it should be, or it's not necessarily there. But how much of a challenge is regulation, or is it not a problem at all? I mean, Sasha, we'll go for you first.
Yeah, I think it's very tricky. I think the fundamental message behind this technology was decentralization, and Ruth, I concede to sort of your point about the Bitcoin consensus mechanism, but regulating in itself is a centralized activity. There is a centralized body. It belongs to a sovereign state. So they're kind of antithetical to one another. And there's a lot of talk about DeFi regulation, and I'm like, what does that actually mean in practice? It's no longer DeFi if it's regulated. So I think that's the reality that we live in today. If we look at more practical terms, I think the EU is a fantastic experiment in policymaking, and I think the relative harmonization that we're seeing is very positive. Around the rest of the world, it remains fragmented. A very big issue that we're facing is travel rule. So travel rule is being able to identify originators and beneficiaries when you're making payments. And there is a complete lack of harmonization and interoperability within the travel rule space. So if you want to make third and fourth party payments globally, it's very difficult. It's on chain, I'll add. It's very difficult to do so in a compliant way, because you might be operating in a jurisdiction which is travel rule compliant, and you've chosen a travel rule provider. You might be sending those funds to a country where they just don't have travel rule. It's they've got insurrections, revolutions going on. Like they just don't care about travel rule. Or another country where there is travel rule, but the VASP which you send funds to is using a different travel rule provider, and those two travel rule providers don't talk today. They'll send a hyperlink to encourage you to sign up to their platform instead. So there's a lot of challenges in this space. It's great that we want it to be regulated and secure, but in practice, enforcing that remains extremely challenging.
Thank you, Sasha. That's so interesting. Ruth, what do you think about regulation?
Well, I've been in regulation for far too long. I guess my general concern is that everything is still globally fragmented, but here we're talking about a digital global ephemeral thing, right? Something that can really move through the ether. So the thing itself doesn't know borders, but somehow the providers are linked to borders and to rule of law. And that in itself makes it really hard. And I think Sasha gave a very clear example of how this creates technological issues and compliance issues on sending and receiving side. And just to say, traditional banking has a problem with the travel rule as well on FATF. And I would posit that the biggest level of money laundering is still done in traditional banking, and none of this is ever really discovered in terms of law enforcement and clawing back the funds. So, the old world isn't a good one at all. The new world is growing slowly, but already comes and sort of hits already barriers in terms of that regulatory and interoperability technical consistency, which is a real problem. And of course, we know that organized crime uses it in a very different way without any travel rules, because they have a free travel pass, right? So I think it will take time to align, and you would hope that with some regulatory experiments in Europe, that hopefully in parts will prove successful, other jurisdictions start to copy. We've seen that with the first Payment Services Directive, which suddenly 2 years later happened in Japan, of all places. So we've seen actually countries around the world realizing the value of regulating payment providers, opening the market to competition. And we moved a long way from there into that whole fintech ecosystem, where now it's about different technologies and different roles in the market, where you need to think about new regimes and entities. And I totally agree. I think coming from an entity regulatory approach and applying that to DeFi, where you've got no entity that can be made accountable, is sort of, is hallucinating, right? It's just not going to work. So I think you need to start rethinking regulation, in my view, where you can embed regulatory principles in processes like smart contracts and code, and maybe have a way of identifying that this is run on this process versus another transaction was run on no rules, and then you tend to know what's happening. I mean, yesterday I was talking with my team in the Ubiquitech space, where we recently published the report, and we were saying, in the world of Web3, we would want to have an enclave where you can enter with a digital identity and harmonize processes, and then in that level who you're transacting with, but you can also transact on the upper level, but you do know that it's probably the wild jungle out there, so that you almost have a definition of the internet being the dark web, and then that enclave where people are identified and operate under common standards and principles are those that want to transact in a safe way. And that's something you can even do today in terms of approach. We just haven't seen a lot of execution. So regulation is necessary. It's always behind events. And it often, because it only covers your jurisdiction, despite global principles from FATF in this instance, it ends up being a domestic play, and therefore nothing is ever the same unless countries decide to do it the same, which will be the same question around central bank digital currencies and interoperability and cross-border. If the EU does a digital euro and maybe Singapore does a digital Singaporean dollar and maybe the US comes around to it as well, how do we actually exchange that cross-border? That will require a harmonized approach from interoperability to regulation as well. So let's see when they get to that. But maybe we can do more in terms of our drive to get the market to become more operational.
Amazing. Thank you both. We are coming to the end of our discussion today, and I feel like we've packed a lot in, and we've really looked at all over digital assets. So just finally, I'd love to look towards the future, and I guess I'd love to ask you, what do you hope the future of digital assets will be? And I know that's super broad, but answer that however you are so inclined in terms of your interests. But what do you hope we will see in the future of digital assets? Ruth, I will ask you that first.
So I do hope that we will have workable digital identity models that will allow individuals to more securely interact in the digital world, keep their personal data safe, and also have more decision-making power as to what they do with their data, and hopefully also monetize it here and there. But that's really the key access point into digital asset world as well. And it needs to be a future of finance that's built on the right ethics, that's built on transparency, where people demand transparency. We don't want to facilitate financial crime, we want to take it out. And I do think, despite that statement, it needs more decentralization to the extent of having more people being responsible for parts as opposed to just a central governing body, which you can easily regulate, but that body doesn't always do the right thing. So I see a big future for digital assets, but knowing the existing financial industry and also humans, it'll take time in terms of adoption, but adoption will be accelerated if we have stable digital identity provisions in the market to help users to engage.
With all of that, I think I would echo that, I'm an advocate of more decentralization. And I think when you really start to look at some of the firms that operate in the space, we've mentioned MetaMask a few times. Parent company Consensus is actually owned by, the biggest buy-side institutions in the world. So, how decentralized really is that? So I think it's net positive, this narrative of decentralization for the consumer, but private corporate interests always kind of find their way to slip in and profit from a space. So I remain an optimist. I do think private business will come and find a way to monetize this, or continue to do so. I really hope for better regulatory clarity. And what I would love to see from regulators and law enforcement globally is just more investment into the education of their staff. And I think around law enforcement in particular, I think this is such a powerful tool to trace funds, trace wallets. It is probably better suited to fight crime than traditional finance. But there is a complete lack of investment into the education of these sort of workforces to do so. So I'm an optimist, but I think I also have to be realistic about the future of the space.
Amazing. Thank you, Sasha. I think we all share your optimism and a tiny little bit of realism, but so hopefully we can see the future that we all hope to see. But that does bring us to the end of our discussion today. Thank you so much for joining me. Just a quick thank you to our online audience. If you like everything that you've heard today, make sure you follow along the conversation over on X or on Twitter or whatever it is you want to call it. And our hashtag is FP50 Digital Assets. Or, of course, you can learn more about the Power 50 by heading over to thepower50.com. But Sasha and Ruth, thank you so much for joining me. It's been an absolute pleasure to have you here for this discussion and learning more about your insights. So thank you so much, and hopefully we'll see you again very soon.
Thanks.
Thank you, Polly. Pleasure.